Yeah, Assalamualaikum and good day, everyone. My name is Fairuz, and for the tournament that will be held next week, I am the one of the adjudicators. So joining me here today is Nick Shahrizal Sulaiman, which is one of our ANSARA typing. So before we start, do you want to introduce yourself first and give a brief introduction on what you do?
Sure. Thank you very much. My name is Nick Shahrizal. Just call me Nick. I was in typing. I was batch 93, 94. After I graduated from typing, I studied accountancy, and then after that, I pursued my chartered accountancy. I worked in the UK for about 8 years. Lepas tu, in 2007, I balik Malaysia. I came and joined an accounting firm called PwC, that's where I have been until today. So today I'm a partner in PwC.
All right, so before we start, I think it's best if we all have a general understanding of what the jargons that will be used in today's discussion, most probably fintech, blockchain, and cryptocurrency. So assuming I'm 5 years old, how would you explain those terms to me in ways that it's easy for me to understand what those terms mean?
Okay, I will start with blockchain first. I think if I'm to explain it to my own child, I would say that blockchain is a technology which is almost like a public ledger, which is self-validating. So for example, let's say if you go to the library and you borrow a book. Now, typically what the librarian would do is record in the computer what you borrow and when you are supposed to return back, or whether you have returned the book back. So the system for most purposes is fine, throughout the world. But the limitation about that system is the person who has control over that data is actually the librarian, and perhaps you have like a little card, and that data can be overridden by somebody, especially if you don't trust that institution. The difference with the blockchain is that rather than having one ledger, the library, you have, imagine if the whole school have the whole ledger. So when you borrow a book, it's not just reflected in the library punya database, it's reflected in everyone's database in the whole school. So therefore, and it has a self-validating mechanism, which we wouldn't get into the technicality, which means that when that transaction happens, it is held as true and validated, and therefore it's very difficult for people to override that. So that is the simplest idea that I can share about blockchain. Of course, it can get a lot more technical than that. Now, in terms of the application, blockchain blockchain is still relatively a new technology, even though that it has taken quite a big amount of conversation, and so on. And crypto is one of those applications, but it's not just limited to crypto. So the idea is that you can make do without a centralized institution to provide that element of trust. Because when you think about it, why do institutions exist in the first place? It's because people want to have an element of trust. So for example, when you want to get a passport, you don't like draw your own passport, because then nobody trusts that you are a citizen. You go to immigration department, and from there you get an element of validity that I am a Malaysian, I have a passport. And the thing about the blockchain is, because of that self-validating mechanism, it provides some avenue where some kind of transactions can escape the idea of decentralized institution. Not all, but some of it. So I think the easiest example is money, because before, the institution that provides currency and money are typically the central banks, or macam dekat US, it's the Fed. But with blockchain, because the technology enables the mechanism of the recording of transaction and the validity, the self-validation of that transaction. So in theory, central bank doesn't have to exist. is for that particular context. Now, I just want to be careful here. I'm not making a statement that because blockchain and crypto exist, we don't need central bank. Central bank's role is actually much bigger than just issuing money. It's about it's about financial stability. It's also about regulating the monetary policy dan sebagainya. So in my view, central bank's role is still very, very important. But what I'm saying is that blockchain enables some part of the transaction to escape or to be done outside of a centralized authority. And number three, you mentioned fintech. So fintech to me are companies that uses financial technology as part of the business model. There are hundreds of fintech around the world, from from platform exchange or Coinbase or Robinhood. But I think the most intuitive one, I mean, if you look at in China, for example, two of the biggest fintech that provides loans, Alipay and WeChat Pay. So rather than applying to borrow loan from a bank, you actually do it through an app, and it has a different processes or credit assessment process as compared to a bank. In fact, dekat Malaysia pun ada, we have touch and go. So touch and go now, you can deposit some money there, you can earn some interest or some profits. So basically, that is one of the explanation of fintech. But to me, it is about using financial technology rather than brick and mortar to provide financial services.
Right. So when people talk about blockchain, when people talk about cryptocurrency, it is usually like accommodated with the fact that it's very disruptive to the traditional economy or the traditional way that businesses operate. So how much disruption does the introduction or the adoption of blockchain technology affects brick and mortar businesses or systems?
No, I think it's very varied depending on the country and depending on the financial sector, because financial sector is very big. It's not just about loans and deposits. There are also payment system, which is some companies which can also consider fintech. But in Malaysia, right now, I know that our country, Bank Negara is in the process of issuing the digital banking license to a selected number of players. But right now, I think in the context of banking, where people want to borrow money for personal loan or mortgages or to buy car or corporate, I think banks are still pretty much dominant. In China, we could see that a lot of the smaller amount loans or micro loans or personal loans are done by WeChat and Alipay. I'm not sure, how do they compare to the overall bank, but I get the impression in China, the usage is a lot more, is much bigger compared to Malaysia. But the banking sector, it's still there. I wouldn't say that they are disrupted completely. I think it forced them to adapt and to become more digitized.
So you're basically saying that banking institutions and traditional businesses in general can benefit from this sort of added competition?
Just like in any business, competition is competition. So from the market perspective, competition is good because it provides more choices for the customers, and it helps to encourage innovation. For the company which end up competing with these competitors, then it basically forced them to rethink about their product, to adapt, and to enhance their business model. So we see that a lot of banks now are going down into the digitization journey. We see that, for example, like Maybank, they have like some accounts which are basically based on digitized kind of value proposition, and many other banks as well. So basically that's what we've seen happening in this country.
Right. So there's like one of the most famous talk by Jack Ma was about how Alipay was distributing microfinance to individuals in the 3210 process. 3 minutes for you to apply, 2-step process, 1 minute to get the money into your bank account, and then 0 hands touching the money. So this is like a super simplified version of blockchain technology. So with the rise of microfinancing like this, how much does the traditional banking system is affected? Like how do those institutions respond to the usage of blockchain technology like this?
I think I would like to draw a distinction between blockchain and also what some of these organizations in China are doing to provide this microfinancing, because the fact that they do microfinancing doesn't necessarily mean it's blockchain. It means that rather than a customer having to go through a branch and fill out a form, they can use an app. So rather than the bank, they use the normal credit parameters. Typically, if you want to borrow money from the bank, if you're a retail customer, they look at your age, they look at your salary, they look at your profession, plus a few others, and then from there they come up with a credit score, and then from there they decide whether to lend you the money or not. Whereas a lot of this fintech company, they use data analytics to draw correlation, to highlight, whether are you a reliable predictor of credit? Are you a reliable paymaster or not? Are you likely to pay back that loan? And they use hundreds, if not thousands, of data points to build some sort of correlation to predict whether you are a good borrower or not. So to me, those are the key difference. And blockchain could be the mechanisms that some of this company can use to record transactions, but not necessarily so. So number two, how can it disrupt the banking industry in the future? I think it goes back to time frame, because if we take 100 years from now, maybe there will be no bank, maybe there will be there will be no cinema, there will be no shopping malls, because 100 years is a long time. But if we look back at the time frame in the next 5 years and 10 years, at least I think in Malaysia, if we look at a bulk of our financing transaction is still done through banks. And part of the reason is because the reason banks have a lot of money to lend is because they have a lot of deposits. And they have a lot of deposits because they have a lot of branches. So the fact that a company exists which has a fintech technology doesn't mean that company has the capability to lend money, because if you only have 1 million in your bank, there's not much that you can lend, right? So to me, technology is basically one of the enabler which enables a lot more entrants to come into the market. But bear in mind that financial services is a highly regulated market. You have to be regulated by Bank Negara. If you're in investments, you have to be regulated by SC, and at the same time, you need to have the power of financial strength as well. You need to consider the amount of capital you have, the amount of deposits you have, and so on. So it's actually quite a big consideration. But to answer your question, I think in the short term, I think banks are here still to stay. But 100 years from now, anything can happen.
Right. So it's very interesting that you mentioned about the presence of regulations in terms of securities and basically anything like financial institutions are dealing with. Like there will always be like regulations. And one of the main allures that attract people to cryptocurrency in general is the fact that it's a decentralized currency, and that it is unregulated. So what does the term decentralized currency and unregulated mean?
Sorry, can you repeat your question? What does decentralization and unregulated mean?
Yeah, in the grand scheme of things, like on why people are attracted to cryptocurrency, or why is there like a big wave towards the adoption of cryptocurrency?
Okay, so let me answer your question one by one. Unregulated means that it's not regulated by any national authority, like national or global authority, and decentralized means that it's not basically centralized to any particular institution. Now, why are people attracted to it? I can only come up with hypothesis or speculate, because when the question is about why are people doing this, essentially, the only way that is ask the people themselves, because different people, different individual has different reason why they buy cryptocurrency, right? But if we look at the facts, and here is where the data is not very clear, but from various research that I've done, there have been a lot of statements which says that people who buy crypto, typically less than 10% actually use them for transactions, to buy food, to buy fuel, to pay rent. Not many actually. In fact, some people say less than 5%. A large proportion of people who buy crypto today, they buy it because they hope that the price will go up. They hope that they will make a profit, and therefore there is an element of investment or speculative reasons behind it. Now, I know that depending on who you ask, that person might disagree. Another person might say, no, I don't buy for investment. I actually buy it to pay rent. Fine, which is why I say that, you have to ask the person itself. But overall, I feel that my gut feel, looking at the people that I spoke to, most people today, they buy crypto because they hope to profit from it. So that's the main reason, not necessarily because it's unregulated, not necessarily because it's decentralized, because I feel, this is my speculation, even if it's unregulated and decentralized, but if the price keep going down, people don't make profit on it, I don't think people will buy. People buy crypto today, many of them, because they hope to make profit.
Right. So is the reason why crypto prices like going up because of the exact thing that you said, like people like speculate that it'll be like an asset worth keeping in the future? Or is there like other driving force behind the rise of crypto prices?
Well, again, I think when we talk about price, just like any asset class, when we look at the principle of economics, it's based on supply and demand. So for example, even we talk about second-hand car in the United States, the price of second-hand car has been going up, which is basically something that doesn't happen very often, because right now the market is flush with cash, so it's supply and demand. So going back to crypto right now, bear in mind, crypto's price fluctuation has been very volatile. It's been going up, it's been going down. Some people make a lot of money. A lot of people also lost their savings because of it. And that is a function of, the supply of the crypto. And again, when we talk about crypto, we have to say which crypto as well, because some crypto like Bitcoin have limited circulation, some have unlimited. So, there are a variety of them. And there are thousands of these digital coins in the world. So you can say that the supply is almost a lot or unlimited. And the demand are people who feel, that they want to buy it to make profit or whatever reason. But going back to your questions, I think, again, the reason can be multiple. It can be some people want to buy it because they want to make profit. Some people don't care about profit. They buy it because they like the technology, and some people just like the idea of it. So again, it's a multitude of factors. Just like when people buy equities, when people buy shares, do everyone buy shares to make profit? No, I would say most yes, but some because they like the company, because they believe in the value proposition of the company, and sometimes they think that it is part of their diversification strategy. So just like any asset class, there are a multitude of reasons why people buy into those asset class.
Right. So let's use the example for Bitcoin, for example, like contrary to fiat money or the common currencies that we currently know of, which are unlimited in nature because central banks can print more money in the future. So cryptos like Bitcoins are very limited in supply. For example, like there's only like 21 million of Bitcoin in circulation, and most of them like haven't been mined yet. Why is the fact that it's limited in supply important?
No, I would actually rephrase that idea in terms of what exactly is the objective of limiting in supply and so on, because there are some views, very simple point of view, say, look, fiat currency unlimited, Bitcoin limited, therefore Bitcoin is good. But to me, that is a very simplistic point of view, because whether things are good or bad depends on what's your objective of doing it, right? So for example, the government can easily put a law and embed it into our constitution that say that Malaysia ringgit shouldn't have this number of quantity. They can easily do that. Some digital currency also, they have unlimited number, right? But the point is this. In today's economy, there are pro and cons of making something limited in supply. There are pro and cons of making things unlimited. So for example, if we look at currently our economy is at a global standstill, many countries are giving what they call it a stimulus package, right? In the United States, in Malaysia, China, many other countries. And most economists agree that stimulus package is important because in the time when people don't have work, that government has the responsibility to keep the economy going, to buy people some time so that, they don't get kicked out from their house, they don't lose their jobs and things like that. Now, the idea about stimulus package goes back to the key idea that governments or monetary authority are able able to print more money and regulate the supply of money. So imagine if in Malaysia right now, we don't use Malaysia ringgit, we only use Bitcoin, right? Then that would actually put a lot of restriction on the regulator, because they can't print more money, they can control the exchange rate, they cannot control the interest rate. So the repercussion to the economy is going to be huge. So therefore, actually, the idea is a lot more nuanced than that. It doesn't mean that because it's limited, it's superior. It goes back to what is the objective. But going back to what is the impact of having certain things limited, so the argument is that it is a better protector against natural inflation, because when things are limited, then the prices would naturally go up in value over time. But then again, it's not a guarantee, because yes, you may have only 21 million Bitcoins, but the way that people buy and sell, they actually put it into a very small decimal point. So in theory, it's actually unlimited, isn't it? That 21 million coin doesn't mean that there are only 21 million people who can buy it. In theory, 8 billion people can buy Bitcoin, because you can put it into a decimal point. So from that perspective, it is somewhat unlimited. And because of that, I'm saying that it's also a function of demand and supply, because let's say tomorrow, nobody wants to buy Bitcoin anymore, the price can go down. So anyway, I know that it's a very quite a nuanced point of view, but I'm just trying to put a point of view is there is no better or worse. It goes back to what you are trying to do, what objective that you're trying to achieve, and basically whether the tools that you have facilitate towards that objective.
Yeah,
on that point, I know that a lot of our audience are not well versed in certain concepts in economics, just because they are still in school and therefore they don't learn economics formally.
Okay.
So can you explain how does the interaction of supply and demand of a currency determines its value of traditional currency, for example ringgit, and how does the actions of a country's central bank affects the value? Like how do we determine value of a ringgit against the dollar, for example?
Oh, a very good point. But this is a very exciting topic. So those of you who I love economics. Some of you who like this kind of topic, you can consider taking this as your degree. After when you go into university. But basically, the concept of currency, the value, it actually goes back to the economic power of the country. So, for example, the more things in our country that people want, that because we export things, then because if for people to buy things in our country, they need to buy ringgit, right? So for us in Malaysia, if we want to buy a property in the US, we have to buy US dollar, because people in the US, they wouldn't accept ringgit. So we have to buy US dollar, right? So if you take that concept, you want to buy things, you want to sell things, and so on. So to summarize, the strength of a country's currency goes back to the economic strength of the country, which is why for a country like United States or Switzerland. Switzerland is a very small country, but because they have a lot of demand on their tourism, on their technology, on their banking, so the value of the currency is very, very high. And for a country where nobody wants to buy anything in it, so let's say today we create a small little country next to MRSM Taiping and just call it Negeri MRSM Taiping. There's nothing on it. Katakanlah just tanah, the currency would be worthless because nobody wants to buy anything. So in principle, that's how currency works. It goes back to the economic activity of the country. Number two, why is central bank regulation important? Because the reason why government and central bank exists is to make sure, part of it is to make sure the economy runs. So for example, if you look at the cases in Greece, Greece actually is quite a tricky situation because their economy is actually quite sluggish. And typically in the past, whenever a country economy is very sluggish, they actually cut down their exchange rate to make the exchange rate cheaper. And when the exchange rate is cheaper, there are more people coming in, buying things, and therefore they can bring the economy up. But Greece is unable to reduce their exchange rate because they use euro. And euro is a big continent. They cannot just say, I want to reduce euro to make more people come to Greece. Cannot, because euro is owned by many other currency. Whereas in Malaysia, our currency is very much in control. We have sovereign control over it. I mean, our government and central bank can decide what is the interest rate and how much money, depending on where our economy is, they can basically move that parameters to help our economy. So again, this is a huge simplification of how the economy works. But I suppose the summary is, in all countries in the world, the authority uses currency to basically protect and to grow their economy.
Right. So one of the also interesting topic that you mentioned is how governments or central banks use a stimulus package in order to increase the amount of money circulating in the market, which probably suggests some sort of use of monetary policy. I think for most of the students here, they probably don't know what monetary policy is. They probably don't know how stimulus package or governments buying and selling bonds affect the inflation rate of the economy, how interest rates are affected. So could you perhaps like break it down in simple terms in order for them to understand?
Sure. During my time, masa dekat typing dulu, some people, they make money selling things in the in the dorm. Hot dog. I don't know whether people are still doing that nowadays.
They still out.
Maggie. that can be a significant source of money. Now imagine that you then the school close ataupun long holiday 6 bulan. So 6 bulan you tak boleh jual hot dog, tak boleh jual Maggie, right? And then you are struggling to buy things that you want, because you also have, you want to go up, you want to buy things and so on. And then your parents say, okay, I know you don't have money now, here's some pocket money. So that is a stimulus package. It's basically economic resources from the government to the people to enable life to go on. So to me, that is the simplest idea of stimulus package. Money that you get from your parents is a stimulus package, because then you increase the supply of pocket money that you have with it, that you can do things with it. Well, the second question you mentioned about what? One is stimulus package. What's the other one?
Like how do monetary policy affects the economy work? Like how do central banks control the goings of the economy through monetary policy?
Okay, that is a very deep question on principles of economics, which is not necessarily fintech and crypto, but basically imagine that you want to create a currency in typing. Let's call it typing ringgit, right? And this typing ringgit, you can use it to buy food dekat canteen, and so on, right? And you also buy it to invest, all kind of activities with it. So basically, imagine if the number of the number of people, the students in MRSM typing, they triple in size. So daripada 200 people become 600. Oh, I'm sorry, I'm forgetting the number. Then there could be some repercussion, because the supply of money is limited, but there are more people. And when you have those natural growth of people, but same amount of money, then you may have the effect of deflation, because there's not enough money to move the activities around. So therefore, the pengetua might say, okay, we need to issue more money, more notes, because we have more students. So that is one of the little example why you need to have some monetary policy within a territory lah. And then interest rate and exchange rate, that will take a long explanation, but basically the idea is, when you have a mode of transaction, a currency, you do need to have a centralized authority to move the levers of the transaction to make the economy grow.
Yeah, so there is a question from the audience here. There has been a rise of crypto trading platforms that appeals to individuals seeking to make quick profit using Bitcoin. Due to the volatility of the crypto market, these promises are not often met. Rather, a lot of people lose money on these platforms. Do you think that crypto trading is not meant for everyone?
Okay, I'm going to my answer is yes, it's not meant for everyone, but just like in any investments out there, a lot of people, they invest in shares, but shares may not be for everyone. There are people who invest in properties in the bond market. Those may not be for everyone, because if we go back to the question, what is it there is no such thing which is for everyone. It's actually what is correct for you based on your risk appetite. So for example, in the investment industry, they have this concept called the risk appetite. Basically, it wants to see how adventurous, how aggressive or conservative you are when it comes to investing money. So for me, for example, based on many questionnaire self-assessment that I've done, I have a very conservative risk appetite. My money just go to ESB, bank account, that's it. I'm not very adventurous. Some people are very aggressive. They put their money in stock market, they put their money in crypto and so on. So the whole idea is that you go for investments that fits your own risk appetite, because with high returns come high risk, right? And the opposite is also true. With high amount of safety, let's say you put your money in the current account, your money will be safe, but you don't get much reward. So basically, the balance you yourself have to decide. But to answer the question, yes, I don't think it's for everyone. And I don't think it's for me, because personally, I have a very conservative risk appetite.
Right. So on that note also, traditionally, like if people want to invest, regardless, like they want to invest in stocks or crypto, they need to open a CDS account, get a broker. Like it's a very lengthy process. But with the advent of things and how digitalization is taking over everything by storm, there has been a rise of apps that enables ease of access to trading to armchair traders. For example, like Rakuten Trade, Binance, Robinhood, Luno. So what are your thoughts on the increase in accessibility towards your modern day layman?
So my view on the accessibility is this kind of accessibility is good, because when you look at how a lot of processes are done today, you sometimes wonder, does it really need to be done in person? So for example, the idea of going to a bank, of having to queue, of having to expose yourself, physically to other people, especially during time of COVID, just to fill out a form, just for people to check your IC, is that really needed? And more, the reality is many people realize that not necessarily. Like recently, in the past, I used to renew my driving license, and the only way for me to do that is to go to JPJ and Pejabat Post. Now you can do it through my EG. So that whole idea of accessibility, of taking something which is physical and moving to the digitized world, I think it's good, and I think it is inevitable, because more and more part of our daily life is done that way. But I don't think the physical presence in the economy is going to disappear completely. So for example, nowadays, if you want to watch a movie, you don't have to go to the cinema, you can watch Netflix. And if you want to buy things, you don't actually have to go to a shopping mall, you can buy through Lazada or Shopee. But shopping malls and cinema and restaurants still exist. So in the end, it goes back to what's the demand of the society. So in conclusion, I do think that this accessibility is good. I do think that directionally is going towards more digitization, but at the same time, I still think that brick and mortar are still relevant in our lives.
Yeah. So related to that, you're talking about how directionally a lot of countries are transitioning basically into a cashless society where like financial technology is playing a big part, right? So do you think like this will exacerbate inequalities, especially with regards to groups of people that aren't able to access technologies? Would that mean that even though like brick and mortar outlets are still there, they might not be able to access microfinancing opportunities, or they might not able to access the funds quickly? Would you think that this would exacerbate existing inequality?
That is a very good and a very deep question, Hazwan. But to answer that, it is not a very simple question to answer, because people are making a link that you have access to crypto, you have more equality. You don't have access to crypto, then you have inequality. But in reality, it is not as simple as that. Because if we look at the concept of inequality and what drives it, it's actually much bigger than access to an app. So for example, in many countries, there is this report done by OECD about the inequality in European OECD countries, which have been going up steadily during the last 20 years. It's been going up in Germany, in US, in UK. The only exception is some Scandinavian country because of their tax regime. Its inequality is less, but all over the world, inequality have been rising. Why? This is where there are a lot of theory behind it, because the thing about economists is not like science where they say, this is the equation, this is the reason. They can only hypothesize. But the reason that a lot of economists have been talking about is in capitalist society, capital creates more capital. So for example, Hazwan, if you have 1 million ringgit in your bank account right now, there are hundreds and thousands of opportunity where you can invest and things to double your money. But if you don't have capital, if all your monthly salary is paid on paying your rent, paying your electricity, which is a lot of B40 people around the world suffer from, then because you don't have that excess capital to make it grow is difficult. Yeah. So that is one reason of inequality. One of the key reasons provided by economists why inequality exists. And number two is also education, because people from a very privileged family tend to go to the best school, best university, best training, and so on. And because of that, they are able to command a bigger pie income from the economy. Whereas people in the lower income group, it's not that they are not hardworking or they are not intelligent, but by the virtue of some of the poor family don't even have money to pay yuran sekolah. You know, in many countries, education. There are many countries in the world where the poor cannot afford to go to school, and even if they can afford to go to school, they may not have money to go to the university. So I mentioned to you two reasons, but there are dozens of other reasons why inequality happens. Now let's go back to the access to app, or to me, it is not as simple as straightforward to that. Because nowadays almost anyone can have access to app. I mean, I'm a kampong boy. I grew up in Temerloh for most of my life. All of my friends in Temerloh have touch and go app. Doesn't necessarily mean that they're all billionaires. And and you would argue that many billionaires in the world probably don't buy crypto. They buy something else. Probably with the exception of Elon Musk. But what I'm trying to say is that correlation between having an app, having an access to crypto, having an access to Luno and so on, doesn't necessarily mean that inequality can be resolved, because the issue is much bigger than that.
Right. So there has been, I'm not sure if this is related to our discussion for today, but one of the things that is disrupting the way, there's a lot of a word of disruption going on. So disrupting the way that people or business operate right now is what we call as a gig economy. So does blockchain take a big role in terms of the transitioning phase towards the gig economy, or not just transitioning, but the advent or the introduction of gig economy to our current economical climate?
I think the potential is there, but I feel that the potential of blockchain is still not fully utilized. It's still very early in the day. Because I think we've seen the application of blockchain in currency, but some people are saying that how they can use blockchain, for the purpose of smart energy grid. So some people are saying that in the United States, when all of the cars are electric, within each car you have a battery. Depending on where the location of the cars, you can actually regulate the flow of electricity. Smart grid, they call it. Some people say that you can use blockchain to make the recording medical records, immigration data more secure dan sebagainya. So the potential is there, but in the end, I think it goes back to how people actually apply that technology. As I say, right now it's still very early, and it will affect the economy, but in what ways? I don't see that much significance asset right now, but in 20 and 30 years there'll probably be more. I think an interesting comparison to that is like laser. So when the technology laser was discovered, it is one of those technology which says that the technology that was discovered ahead of the problem. So when the people discovered laser by accident, they had no clue how to use that technology, and then they decided to use it in Blu-ray kind of disc. Now people use it for eye surgery, people use it for 3D printing. So, there are many technology in the world where people discover it, but people still don't know how it's going to pan out. I feel that blockchain is a bit like that. They discover this great concept technology, but in terms of how to apply it widely to our society beyond the currency, that remains to be seen.
On the issue of gig workers or gig economy as well, I was wondering because people who participate in the gig economy, obviously people who work for delivery apps, for example, they don't enjoy the same protections as like more traditional workers that work for companies. They don't have access to KWSP or health insurance or things like that. So they're generally are not covered by by a sort of safety net. Do you think that this development is worrying because we see a lot of young people, because they aren't able to secure jobs in more traditional companies, they resort to participate in the gig economy? Do you think that this is a negative development, or is this something that's actually positive because at least they are able to gain some sort of income even without those same benefits?
Okay, my response to that is I don't think of gig economy as good and bad, or good or bad. To me, any form of economic activities that provide people with choices to work and earn income, as long as it's legal, it's good, right? What am I worried about? I'm not worried about people in gig economy. I'm worried about the fact that the disruption, the slowdown in global economy, because as we see nowadays, countries don't actually operate on its own. Whatever happens in China, in United States, in Europe, actually affect us economically, because as a country, number one, we are very small. We are very export-oriented economy. A lot of our GDP is driven by exports. And number two, the countries that we export to most is United States, Singapore, China, and Japan. Number five, number six, probably EU and others. So whatever happens to the global economy because of pandemic, because of political instability, war, and so on, will have an impact to us. That's what I'm worried about, because when the economy slow down, a lot of people lose job, a lot of people get hurt because of economic conditions, and that's what worry me. But I'm not worried about gig economy, because to me, doesn't matter you call it gig economy or formal economy or whatever, it is economy. However, having said that, talking about gig economy generally, I do feel that the company, organizations that employ people owe an obligation to the stakeholders, and the stakeholders could be riders, people, and so on, to protect them, in terms of health, in terms of insurance, and so on. And this is where we have a lot of issues on different by countries. We see a lot of newspaper articles being written about how for some companies the people are not protected by insurance or by health or by medicine, medical coverage, and I think that's bad. I think any people, doesn't matter whether you are in gig economy or in formal economy, needs to have those protections.
There's a question that's been raised in the chat. So there has been concerns raised relating Bitcoin mining contributing to global warming due to its carbon emission by its machines. Do you believe that this is an indicator that cryptocurrency may not be the future, in addition to its threat towards centralized bank?
Okay, I think those are two separate questions. The question is, has there been concerns that Bitcoin mining contribute to global warming? A lot of views that we've been reading. And again, these are all very, very, very early. Different people have a different point of view. But if we go to the opinions that's been coming up, the answer is yes, it contributes simply because of the amount of computing power that you need to enable or to validate that transaction. So there are many opinions that have been put up. And again, it also goes back to which crypto you're talking about, right? Because there are thousands of crypto. But people are saying that purely from the energy consumption perspective, whatever that we have, like the centralized payment system, is a lot more efficient in terms of recording the transaction, in terms of validating. Because the idea of crypto is that you have all that self-validating mechanism across thousands of computers. It uses a lot more computing power. Because of that, it uses a lot more energy. I know there are a lot of crypto champions says that going forward, we will have a more energy efficient crypto. I mean, that's what they're saying. But basically, that's a point of view that we've been reading a lot recently. The second question is a separate question because it talks about, is it a threat towards the centralized banks? I think it goes back to what threat means, because many central banks, generally speaking, or any country, puts a lot of importance in law. So for example, in this country, under our act, for people to do a digital exchange, you have to be a recognized operator. There is a term for it, meaning that there is a law behind it. So meaning that doesn't mean that the fact that it's crypto is unregulated. So for example, in Malaysia, you can buy Bitcoin legally through Luno because Luno has been approved by Securities Commission, right? But there are some other exchanges out there which are not recognized by SC. Therefore, it's illegal for them to do business in the country. So to me, it's not threat or not, because central bank's objective in any country in the world is not to control people's life. Sometimes there is this idea that central bank is like this very dark kind of party just trying to do evil in the world. I completely disagree with that. They are there for a reason. They are there to add stability to the economy, to regulate the economy, and so on, which is why all countries have their own central banks. Number two is that it's not really a threat, but whether it's legal or not. So if it's legal within the framework of the country, then it's fine. If it's not legal, then just like anything else, you cannot do illegal things in any country. So that's my take to it.
Right, so the word regulation and cryptocurrency goes hand in hand in terms of how conflicting it is, which we might have seen in certain countries where regulation in terms of its currency is a big deal. For example, like China and India, where they have a major crackdown of crypto mining. And recently in Malaysia also, I think for the past few weeks, the Securities Commission has issued that they're banning Binance, which is one of the largest crypto trading platform in the world. So what does this spell for the future of cryptocurrency?
I think for crypto to grow, to become more dominant, they have to be legalized. I mean, they have to follow the rules of the country that they want to do business with. Just like in any country, just like in any economic activities that we do, whenever we want to export, whenever a country want to export their cars to us, or we export our car or palm oil to other country, we have to follow the regulation of that country, right? So to me, because the cryptocurrency is all about adoption. So if nobody adopts it, it's going to be worthless. If a lot more people adopt it, then it will become more prevalent in our day-to-day life. In order for it to be adopted by more people, it has to follow the legal framework of the countries they are trying to operate it, because you cannot offer a value proposition based on the idea that it contradicts the law. Then tak boleh lah. Yeah. So to me, it will, for crypto to grow larger, then you have to follow the rules of that of the country.
On that issue as well, like you said, if crypto operators want to grow, and for this technology to be adopted, they need to follow regulations. So what's the current policy sense of regulators around the world towards cryptocurrency? Is it something that they want to encourage, or is it something that they want to rein in?
I think from what I've been reading, and this is not my own opinion, there is currently a lot more push by regulators globally to regulate it further. Now, by regulate, it doesn't mean that they are going to reduce, increase, and whatever. Regulate means that the word regulate simply means that you want to take a certain set of activities into an established framework of rules that you have in that particular territory. Because there are many instances of industry, after it gets regulated, then it becomes more competent. Because for example, in many countries, you have anti-monopoly law. So you have very powerful agency that breaks up monopoly. So of course the monopoly company complains lah, but actually as an industry is better because it encourages more new entrants than sebagainya. So I do see more regulation on crypto for various reasons. And I think because in the end, laws and regulations are important. So for example, that even in typing, it's highly regulated. I mean, you can't just wear anything, jeans or singlet to class. You have to wear uniform. You cannot just decide to just take a day off because you feel like it. You actually have to attend classes and you actually have to do exams. So does it mean that regulations are bad? No, it's not. It's there for a reason. It's there to ensure that a certain objective are met, the objective of the whole institution and for the whole community.
Right. So in terms of regulation, certain countries, for example, China and India, they are actually like taking a parallel route towards that cryptocurrency adoption by introducing their own digital currency. So what is your opinion on this?
Okay, again, I'm to be honest, it's still too early to say, but my gut feel is, these countries, they are trying to see what's the potential of this digital currency as part of the legal tender of the country. And I think it is a good trend because, you always need innovation. You always need people or countries trying out new things to see whether it works or not. So I think my gut feel is, it is an attempt to basically see what is the potential of digital currency as a whole, within the confine of the country's legal framework.
We have a few more minutes. I think it'll be good for us to know, like for example, like in Malaysia, what are the major fintech players that are currently operating, and like, what exactly do they do?
Okay, I will not. I should not name the biggest fintech companies and so on, because then it might suggest that these are the best companies to invest in and so on, which I'm not in the best position to do that. But you can see around. Look at your smartphone right now. Look at the app. Does that entity provide financial services? If you or your friends have that app on your phone, then basically that's one of the fintech companies that's growing or quite big, because fintech is all about adoption. How many people actually use it for transactions? So I think it's something which people would intuitively know the answer to that question.
Right. So one of the things that kind of like being a block towards Malaysia adopting into or transitioning into a cashless society is because of Touch 'n Go's punya monopoly on cashless transaction. Like, would the rise of fintech companies or blockchain technology in Malaysia change that climate?
Well, we have to be careful with that statement because there are a few statements there. You made an assumption that the reason why it hasn't grown because it's blocked by a certain entity and people come. But if we actually go to that first statement, is that statement actually true? I'm not actually sure. So if the question is, why is our cashless why haven't we gone cashless? Why haven't we gone cashless completely yet? There could be many reasons. It could be that many people are not familiar with it. They don't feel comfortable with it. Many vendors don't offer it, because if you want to use it, but the vendor doesn't offer it, then you can't do it, right? So there are many other factors. But my answer is this: with time, it's just a matter of time before we go cashless. How long, I'm not sure. But if we look at China, a large proportion of their cash transactions done by individuals are cashless. And I think the whole world is going there in that direction.
Yeah, so this is like another question that I have, but not directly related to crypto or fintech, just because, again, the fact that a lot of the participants today, they aren't familiar with economic jargons or economic concepts. I think one of the most common terms that is thrown around in media or even in conversation is the term GDP. So what does it mean when our country's GDP expand or when it contracts, and what does that mean for the average person or average consumer?
Okay, to me, to put it simply, GDP is just one of the measurements that measure the size of the country's economy, which is measured by what is the amount of exports, the amount of, sorry, for GDP is domestic. There is also gross national product. But to put it simply, it measures the size of the country's economy. So for example, the US economy is bigger than Malaysia, their GDP is higher. So it's just a number being used. So there is a formula for it. I would encourage you to do a bit of research about the formula, because from the formula, you get to understand what are the parameters that drive the GDP numbers. But it is basically a metric that is used by economists to see how big the economy is.
Yeah, I see.
So when people say GDP is growing, that means our economy is growing. Typically, that's what economists mean.
Yeah, so thank you. I would like to open the floor to questions from the audience. We still have a few minutes left, around 3 or 2 minutes. But I would say that the session today has been very, very informative. I think that come competition day, the participants will find that a lot of information discussed today will be very, very relevant. So yeah, and thank you to Nick Shahrizal for being here today. We really, really appreciate you being here today.
Well, thank you for inviting me.
Yeah. Do you have any questions from the audience? I think we don't have any more. Is that correct?
Yeah, I don't think so. I think it's either we address all of their questions, or the discussion would be too difficult for them to understand. So we kind of like lost them along the way. But no worries, we've recorded the whole recording, so you can access it later. And if you have any questions, feel free to let us know, and we can help address you those questions.
Yeah, well, you know, I hope what I've shared will be useful to you. So good luck for your debate competition. Personally, I've never been involved in any debate, so you know, so I wish you a lot of luck. But you know, a tip that I would give is sometimes the best debater may not necessarily be the people with all of the knowledge, because nowadays when you talk about knowledge, they're all in Google anyway. You want to know who are the top 10 fintech companies, is in Google. You want to know the definition of GDP, is on Google. Everything is on Google. I think that the key point is, you know, in debate, based on what I've seen, it's not just how much data that you keep in your brain or how much you memorize, it's how much you actually analyze and dissect the argument given by the opponents. So if the opponents don't give a very logical thought process, and you know, that's where you should focus on, and basically use your critical thinking to basically turn the arguments your way. So you know, I think information and data and knowledge can go a certain way, but I think in the end it's all about how you frame your argument. So with that, I say good luck to all of you, and thank you very much for having me here.
Yeah, we definitely agree, because obviously everything is online, so you guys can definitely Google things if you want to, even though you shouldn't. But
Hands off.
but it all depends on how you frame your arguments and how you use logic when proving certain things. With that, I think we have come to an end of our session. I hope to see everyone next week, and I wish everyone good luck. Thank you.